Hello and welcome to Todd Miller TV. I am joined today with Adi Moore, who is the guy in charge of the Moore Group. Expert real estate agent, does property management, works with a lot of investors, and thanks for being on the show.
Thank you for having me.
So, okay, let's talk investments. A guy comes to Vegas from who knows where. They've got $100,000. Why should they take and put money into a real estate asset in Las Vegas versus buying something on the NASDAQ or investing in a CD or some other form of investment?
Okay, first of all, everybody's money is falling asleep. Money's in the bank collecting less than 0.5% interest. CDs giving you some sort of better returns, over the long term. Let me see. Question for you.
Yeah.
Am I supposed to be looking at the camera? Or
Doesn't matter.
Okay. So you want to start it over?
No.
Okay, I'll continue. All right. All right.
Okay, so you're getting, if you're investing in a bank or CD, you're getting 1%.
Exactly. Less than 1% even. You get like 1% if you're doing it for 3 years, but people want to keep their money liquid.
Okay.
Most of the things I see is investors, their money's falling asleep in their bank, they're making nothing, they have money and they don't know what to do with it. Best bang for the buck is investments in Las Vegas.
Okay.
Residential real estate, whether it's condos, houses, as long as your holding cost and your net return makes sense. For the most part, I'm seeing over 10%. I have investors calling me and telling me I have 3 daughters. They're going to college in 7 years. I want to buy a condo for each one. By the time they go to college, we'll be able to sell it, and the profit will pay for their tuition.
So they buy a place today. In 7 years, they'll get their money back, and the profit will pay for their kids' school.
Honestly, they're buying exactly that. They're buying a place today. In the meanwhile, they're making about 10% return on their money, and anywhere from 4 to 5, 6 years, whenever it takes their kids to grow up and go to college, they'll sell the place and actually pay for their college tuition with the proceeds.
Okay, so you've got some numbers here, and these are interesting numbers. Let's say I've got maybe 70 grand to invest in a house or condo. And then how do I put my $70,000 in a house, how do I get money back?
All right, so when you're saying 70,000, that hopefully you're talking about the total investment amount you want to spend is 70.
Okay.
If that's the case, then we have to work backwards from that. If 70,000 is the total amount you want to invest, it actually means your real investment. You're looking for a house or a condo in the ballpark between 60 to 63,000. That way it gives you room for closing costs, transaction fees, and also rehab of the property, bringing it to rentable condition. So your total investment is 70,000. We'll work from that. We have all sorts of holding costs associated with the investment. Holding costs such as homeowners association, property taxes, if there's a HOA, property taxes, home warranty, if it's chose, insurance, maintenance, and miscellaneous, and the management fee that we take. These numbers vary from neighborhood to neighborhood, from house to house, case by case scenario. We have a pretty good estimate. Using very conservative numbers, so it could only be better. For the most part, we're finding that the holding costs, including management, property taxes, insurance, maintenance, miscellaneous, anything that can happen, it's coming to about $400 a month. So we buy a $70,000 house. For the most part, it's like 3-bed, 2-bath, 1-car garage. May even be 2004, 2005 product. So it's nice stuff. Rent it out for about $1,000 to $900. Let's just be conservative, $900. $900, holding cost is $400, you're netting $500 a month. $500 a month times 12 months is $6,000 a year against your $70,000 total investment. $6,000 a year against the $70,000 is a little bit under 10%.
Okay.
Let's get $6,000 divided by $70,000 investment. You're talking about, you're talking about 14%? Did that make sense? Or did I do no, 6,000 divided by 70. Oh, there we go. It's 8.5%. 8.5%.
And that's that's conservative. That's low end rent and high end on all your other costs.
On all my other costs, exactly. I mean,
and that's assuming that you do have to do $5,000 of rehab to the house. You may not have to.
Exactly.
You might get a rent premium.
Exactly.
Potentially.
But I mean, that works to the investor's bonus. Let's say we don't have to spend $5,000 on rehab. You may, if the property sits vacant for a month or two, that will count into those numbers.
Okay.
Besides that, HOA, the homeowners association fees, they vary from neighborhood to neighborhood. I have units that are, $350 a month HOA, and I have houses that are $45 a month.
Yeah, because just with this scenario here, you've got $100 for HOA. If you're not in an HOA,
then that's
going to
bump you right up over 10%.
Huge extra return.
For the most part, these numbers are very conservative, and we see higher results.
Okay, so your money, this isn't a buy and wait 5 years to get a return. You'll be getting a return immediately.
This is immediate ramification. Is that the word I'm looking for? Immediate.
Okay, so given that, what do you say to the person who says, yeah, but I heard prices are going to fall 7% next year?
God bless. You know what? 7% on $60,000, $70,000 is about $5,000. In the meanwhile, we're buying them, renting them, and collecting 10% on our money. So it takes a year for it to fall 7%, but we're already renting it and making 10% on our money. In the meanwhile, none of my investors are afraid of a decline. The Las Vegas market is pretty much, skating the bottom. I can't really see it going anywhere else unless you're talking about high-end homes. For the most part, these properties are already at their lowest. Maybe go down 5% on nothing is nothing. That's what I say to my investors.
You do it all. You'll help them invest it. You'll help them manage it.
Definitely, we help you find the property. We help you acquire it. We help you with the rehab of the property and bring it into rent condition. And then we will, blast it on all our, secret websites where we find our renters.
Okay.
And we'll get a renter in there. We'll screen the renter. We'll put him in. We'll move him. Property condition report. Get him squared away where he's happy. Collect the rent. Deposit in your account. The whole 9 yards. And then when it comes time in 5-6 years to sell, we're going to do it for you too.
How do they find you?
www.themoregroup.com, nvrs.com. Call Todd, my mentor, any way possible.
It's the More, M-O-R group.
Yes, sorry about that. Exactly, morgroup.com.
All right, well, that is the update for today. I hope this was informative for you. If you're an investor, this is the guy. And thanks for tuning into the show.
Thank you.